So yes, I have very little in equities. A lot of my stuff is cash flowing, but I would say really it's just diversification. And you also have to realize, take a Stoic approach. I understand that Marcus Aurelius, every year he'd spend 1 or 2 days sleeping on the floor just to prove that he didn't need to be the emperor of the known world to be happy.
Welcome to The Path to Wealth, the show about well-being, fulfillment and financial freedom. And I'm your host, Hannes Henschel. Welcome back to The Path to Wealth. I'm your host, Hannes Henschel, and today we have the real estate data scientist, George Roberts. Before devoting himself full-time to commercial real estate, George worked as an award-winning data scientist and bioscientist. He then transitioned into entrepreneurship. George founded Walnut Grove Homes, an upscale residential construction company based in Troy, Michigan. He is also a principal at Horizon Multifamily, which sponsors value-add multifamily opportunity in the Southeast for qualified passive investors. In addition to his over 300 units as an active multifamily investor, he is also an avid passive investor. His passive investments include multifamily, car washes, early-stage companies, and a truck rehab facility. George is also the host of The Foundry, a podcast focused on entrepreneurship, leadership, and mindset in the commercial real estate space. He's also hosting the weekly Commercial Real Estate Network at noon Eastern. It's a Zoom meetup for investors and other commercial real estate players. Welcome to the show, George.
Well, thank you, Hannes. It's great to be here.
Yeah, thanks for making the time. So, given that we're, in very interesting market dynamics and you've kind of started your real estate journey with what probably was your and my first bigger crash experience, 0809. That's kind of when you started getting into the weeds. So the second big cycle that we're going through. What are you seeing in the data right now? What is the data telling you about where we are and what is going on for multifamily real estate?
Well, a lot of things. First of all, some of the better markets today are the ones that may have been passed by yesterday. And a lot of the markets that people were looking at yesterday, I think Boise, Idaho has got to be the best example. They're experiencing some major crashes. So the first thing that I would tell people to do is don't be afraid to look in places that you might not have looked yesterday. I think affordability is going to be very big going forward because we can't all live in the San Francisco Bay Area. The numbers just don't work. And so I think a lot of people are going to end up being drawn to areas that are maybe nice, perhaps warm, but maybe overlooked in the past.
Yeah. What do you think are some of those areas right now that have been historically overlooked, or at least in the last decade?
Well, one of the areas I like a lot is Cincinnati. I do like the Midwest, but certain parts of the Midwest, certain areas are attracting population or at least stable. Cincinnati has been on the rebound for about 10 years. And it's taken time for people to notice, taken time for people to decide that, hey, this is real, this is a trend, this is something that's going to continue. I also love East Tennessee. A lot of people talk about Nashville, Central Tennessee, and that's a great place. But again, those prices have gone up a lot and the population has increased a great deal. Question is how much more that can be sustained. So places like Kentucky, East Tennessee, areas that are attracting population, but may not have been the first tier over, say, the last decade.
It's interesting that you're saying Cincinnati. It was literally the first city that I arrived in the United States, now way over 20 years ago. Tennessee, definitely a market. East Tennessee is something that I rarely hear, and I think as you're describing it, it's when people speak Tennessee, it's usually Nashville, and we personally also we own a property in Nashville, and it's an area that we are very interested in for different reasons. When you're looking at the affordability of things, Are you looking at it more so from an investor perspective, or is it about the actual tenants that can live in it?
Well, I love your question because, yes, it's more for the tenants because I see these as areas that have a pretty decent rent to income ratio. And when you have that, you've got room to grow. A lot of these markets that people have been investing in, that's not really the case. So if you're in Tennessee or Kentucky, it's about 16 or 18%. Rents could almost double before people become rent constrained. The standpoint of the investor, of it being a little cheaper per unit, a little easier to get in, that's really just a bonus.
Yeah. Yeah, that's true. I mean, I think affordability, as you mentioned, the kind of rent growth we've seen in some of the major areas, whether it's Miami, Fort Lauderdale, or Dallas, Austin, it's actually quite intense what has been increased on the rents on the workforce. And I mean, there will be a point where the average worker will be, just like we've seen it in major cities like on the West Coast or in cities like New York on the East Coast, where the workforce has been pushed out so far out of the actual core of the city that they have to commute so long, and it gets really unattractive to live there for families.
Well, that certainly is a problem. And of course, I, like many people, do have a value-add approach. In some ways, that may be making things worse, but in many cases, not, because those workforce people that you're describing, they want a clean, safe place to live. And there are many properties that are still mismanaged, and you can bring them up to that decent standard. Not as nice as a new Class A, but still much better than what currently exists.
Yeah, that's for sure. And obviously, value add, whether it's 70s, 80s, or 90s, will never be quite like a Class A. And I mean, at the end of the day, Class A is a segment for a higher income kind of tenant. And it's not exactly
right
what we would consider working class. Even so, I mean, we all appreciate a nicer home, but at the end of the day, again, it has to do with affordability and income. And historically, working class gets the kind of older inventory simply based on that.
Right. Well, building does seem like it's possibly surging back. I know now we've had 2 months that we've had over 1.5 million units completed. That includes our March report of 2023. So hard to say yet with the banks blowing up. Don't know if construction will continue above 1.5 million units, but it looks like we're at least at replacement rate right now. We're keeping up. Not chewing through the backlog, but keeping up.
Yeah, but from what we're gathering, or also from the sentiment that I'm getting from the developers, is that development does reduce right now. There's a lot less that's being put into work now, given where we are with the financing, and just probably like the syndication space, development space will pick up again. We're speaking like as the Fed is about to maybe soften their course a little bit and interest rates will even out a little bit more.
Well, absolutely. Every recession you do see that building goes down, and this is the first recession that I can remember that we weren't at least at parity with building. We're actually quite underbuilt. So it will be interesting to see that trend continue. And then at the same time, we don't really know what to expect. I think there's a lot that's very strange on the macroeconomic front these days. We've printed so much money that I don't think we're seeing the sort of relationships we'd expect. We sort of opted out of the last recession, and kicking that can down the road, you know that when the trouble comes, it's likely to be far worse.
Yeah. So where do you think we are currently in terms of housing shortage? What's the number that you're seeing in the data? Obviously, there's different sources, different numbers. What are you currently looking at?
Well, my number is higher than what you're going to read in the press. A lot of people say 5 million. They're looking at household formation. I would say more like 8 million, because I'm looking at how underbuilt we are after decades. And with a large amount of immigration on top of that, I'd have to say that could even possibly be on the low end. So it's severe.
Yeah. I mean, that's a lot of construction that needs to happen. And that's And given where inflation brought construction prices, the interesting thing is the units that are coming to market right now, despite the pressure of the developers to unload them as quickly as possible because they're on bridge debt, they will still make a decent profit because of the original kind of pricing that they went into the project with. And if they were able to keep the costs in check over the inflation period, they can actually deliver them significantly lower as to what new replacement cost will be now.
Well, absolutely. That's right now, developing, it's quite a business to be in because, yes, prices have gone up quite a bit, but labor's also gone up. Commodities have gone up. Are commodities up today? It's hard to say. Every day it's different. In other words, if you ask that question to me 6 times over the last 6 months, you might get very different answers. It's very difficult for builders to plan. It always has been. But when you don't know whether labor is increasing too, but lumber is going to increase 2x or 3x over the course of your project, a lot of builders, and this is something that we found too, that it makes more sense to build a spec or literally a speculative home. Build it and then sell it is in some ways less speculative than locking in that price, not knowing what your costs are going to be at the outset. So it's crazy times.
Crazy times, especially for developers and builder. And, it just seems like every other month you feel like, okay, this should finally calm down. Things should finally calm down. And, it's kind of the next blow up. At the same time, you just mentioned we're basically kicking the can further down the road. So are we overall kind of headed for a major impact, whether it's like in the next couple months, or is it more like, is the real big one just to come and it hasn't even hit yet?
Well, like Fred Sanford, I think a lot of economists have been expecting that the big one is coming right around the corner. And so I think we really don't know. I think the amount of, again, money printing is just really unprecedented in this country. We have all kinds of challenges we're facing, perhaps the end of the petrodollar system. We don't know the future of the U.S. as the world's reserve currency. All of these things are going to impact how all of that printed money impacts us. Yes, we're kicking the can down the road. I think you could have said a couple of years back that we had an everything bubble, and it's just getting worse. I mean, if we had an extraordinarily large bubble in 2006, 2008, then all I can say is that it's quite possibly going to be worse, certainly going to be different. I don't expect the housing impacts because literally almost everything is different. We're underbuilt today. We were overbuilt before. We had poor underwriting standards then. We have stronger underwriting standards now. We have much higher home equity now. So it's going to blow up someplace, and I think it's going to blow up pretty hard, but difficult to make a prediction exactly where.
Yeah. So how do you navigate your own investment strategies and those, for example, of your passive investors? You need to make good judgment with the syndications that you're leading. You have your own capital to preserve, your own investments to take care of. How do you make good judgment in such a unprecedented and maybe unusual, uncertain environment?
Well, now more than ever is the time for prudence. This is a great time to have capital on hand. The more dry powder you have, the more reserves you have, the better. And that goes, I would say, on 2 levels. First of all of your investments have to be properly capitalized. You've got to have that working capital going in. You've got to have cushions in all of your repair and renovation budgets, but you should also have a personal stash of capital, not just for your own purposes, but if projects have trouble. It's very important to have strong partners in a business environment like this. So I would say capital reserves have never been more important. Proper underwriting is always important, even more so now. You have no idea, are we going to be able to refinance out of this bridge loan at a better rate? We don't know. And if the banking system blows up, we could have two problems. Yes, maybe the rates come down, but how easy is it to get a loan at that point? What are banks going to be lending on? So I think we have to tighten up our lending standards. Our financial standards have to be of the highest. And here's one thing that I think people are doing wrong right now. I hear a lot of people saying, well, I'll take a lower LTV. Well, that's fine, but that's not nearly as good as having cash reserves. So given a choice between the two, I'd rather have the cash reserves to make sure that we can carry through anything that might happen.
Yeah. Yeah, definitely. And the thing also, you mentioned banks. The question is, which bank can we lend from in the future, given that so many of the real estate investments, so much of the funding is also done by regional banks. And right now, what we're seeing is it's kind of all falling together into the big banks. There's less trust towards the regional banks, despite them being such a crucial piece to the puzzle of our space.
Well, the banking system is a mess. I don't know how deep you want me to go into it, but we have a lot of issues. Bond portfolios are just a real mess right now. When interest rates rise, the natural effect is that the principal value declines. That inverse relationship that's dictated means that there are a lot of banks that are hurting. A lot of their collateral is very low. Banks are essentially forced to invest in certain things. They have to have a certain amount of Tier 1 collateral. Well, guess what? If your treasuries and the mortgages that you originated a year ago are yielding very low, but you have to offer high rates to attract deposits because we live in an inflationary environment, you're losing your spread, the profitability goes way down, and the possibility is that you're going to have some banks like Silicon Valley who did literally no interest rate hedging and ended up literally going bust.
Yeah. Yeah, it's quite a pickle, and obviously this is beyond you and me. This is for some other desk to solve this. But what are the questions and conversations that you're currently having with your passive investors?
Well, first of all, it's just harder to get passive investors in the door. People are protecting their capital, and a lot of that I think is good. I do think that it would make sense if people slowly and in an orderly fashion would invest less in Wall Street and more on Main Street, particularly considering the fact that we do have a major housing crisis. But I don't know if the questions have really changed. I think that people are always concerned about capital preservation, perhaps more so now. Certainly, I think that the more advanced passive investors are asking questions. Maybe 6 months, 12 months ago, it might have been, well, do you have a rate cap in place? And now, questions I'm hearing is that, well, wait a second, is this fixed debt? How do you know you can refinance out of this? I remember it wasn't so long ago just saying that we're not going to assume refinance. Well, that was conservative underwriting. Now, that's just baseline.
Yeah. Are you currently pursuing any deals? Is there something that you're working on? Well,
I am, and actually to further flesh out what am I doing to protect my investors is looking for niches. I'm doing different types of deals. I see that multifamily is getting a bit crowded, so I've been looking into hotel to multifamily conversion. I'd like to do some build to rent when the time is right, and this still, I think, is a decent runway for both of those types of projects. But looking to diversify, making sure that we're not all chasing the same project is one of the things I'm doing. But again, I've also shifted my approach. The things that I'm looking for, I really do like mom and pop deals because, look, you need a margin of safety. And if you can't raise rents right out of the box, then your underwriting is in jeopardy from day one. Having that cushion means that essentially, even if things do go bad in your market, you're doing well. You can at least maintain your rents. It's also good to have, as I mentioned, fixed financing. But again, if you're working with a mom and pop, somebody who might have owned something for 20 or 30 or 40 years, very likely that they're willing to offer seller financing, might even be on terms that you can't get from an agency or a bank.
I think in the current environment, seller financing is actually an attractive way to have debt, because just the way it can pan out, and as you said, the terms can be preferable. You if you find the right seller, that is, if you have the right kind of relationship with them, I think this could be very beneficial.
Well, absolutely. I mean, sellers have yesterday's prices in their mind, and buyers have market prices in their mind. And it's a great way, I think, to bridge that gap. It's a way to give everybody what they need, while at the same time providing something that's tax efficient to the seller. I think it's something that should be discussed more often, and I'm myself working through the reasons why that's not the case. I've been talking to Pace Morby. I had him on my show, and he says that one of the main reasons that the brokers don't like seller financing, or even in a zero down situation that he's been successful with, is that he has to literally say to the broker, look, we'll pay your fee. Sometimes it's that simple. The broker won't say it, but thinks, hey, wait a second, is there going to be enough money to pay my fee? Am I going to get squeezed out? I don't know if I want to present this. So I think that for those who are out there trying to still make those deals happen, looking for the seller financing, don't be afraid to ask for it, and have the heart-to-heart conversation. I mean, ask, what is the seller trying to accomplish? And can we get the seller on the phone? I'd like to ask some questions. How can we structure a deal that makes sense? And I think it's always been the case that these techniques have worked in larger deals, but when you have a real seller's market, it's been easier for brokers to push those deals away. It's not so easy to push them away now, when it may be more difficult to get the offers in the door.
Yeah, especially where the overall transaction volume is right now. I think brokers also want to make deals wherever they can. George, can you still hear me?
I hear you loud and clear.
Okay, cool. Cool. I thought you were good. So, George, now that we kind of established where the current real estate environment is, what brought you originally into real estate? Why hard assets? Where did your financial literacy come from?
A lot of that came from being a data scientist. I'm always looking for new opportunities. And I feel that's what any good data scientist should be doing every year, every 6 months, maybe every quarter. Just reevaluate. Am I in the best place? Where would my talents best be suited? And I saw that we had an extraordinary housing crisis, and that the housing crisis was continuing, that it really was not being solved, and that it was very important to take the leap. And it was a pretty big leap. I was making over 6 figures. In many ways, it was a comfortable place to be, but realized that, hey, if I go into real estate, not only am I potentially making a whole lot more money, but I'm also helping to solve a real problem. And I guess the other strand came from my father. He was in finance, and he was always launching businesses. His love of entrepreneurship is something that really inspired me. So we would always talk about what to invest in, different asset classes, and what makes sense. And for me, that sort of education coming at home was very important. It was more about asking the right questions and mindset, as opposed to any particular thing he told me. But just putting the two things together, it just made more and more sense. Look, I'm in fintech. I'm already in the mortgage space. Why don't I actually just take the next step? I'm already an investor, and invest where the money is needed the most.
Yeah. What are some other aspects where you currently think that money is needed the most? What are you seeing in the data? What are you seeing in the world where you feel like your money can be put to good use, but at the same time can make a difference, also benefit you as an investor? Well,
this is a real moving target, but if you look around, and there are many asset classes I could talk about, but commodities, or I should say rather, equities are really easy to get into. Commodities are trading at maybe a century low versus equities. Taking a look at some of the things that the world needs right now, a world at war, I've done really well looking at shipping, but when I say shipping, I mean, I don't know when this airs, and if you watch this a month or even 2 months down the road, the phase of shipping that you should be in could be completely different. But right now, I've seen recently there's been a decent rebound in bulk shipping, and that may or may not continue. But I was able to get into container shipping when that was the right place to be, when the ports were all snarled up. I got in before that. I stayed in through the port snarl. I got out of it. I've also invested in floating storage and regasification units. I mean, not as financial advice, but just telling people what I'm doing here and figuring how is gas going to get into Europe? Well, if it's not going to come in through pipelines, and if it's not going to be purchased from Russia, then it's going to have to come in through the sea. And so just reasoning through things like that. The world needs something right now. What is it? And how do I invest in that, which benefits, as you said, not just me, but also provides something to the world? So I'm looking at commodities. I think the right mining stocks might be valuable at this point. And so I'm looking into, and again, don't want to share tickers because, again, that's going to change day by day and week by week, month by month. But the right mining stocks could be proper. And yet we do see that, I think, was reading just yesterday that lithium, it may be oversupplied relative to prior projections. So moves very quickly. If you're going to invest anything commodity-based, you really have to know your stuff from A to Z, and you have to be prepared to move quickly.
Yeah. So two things here. So one is when you say you're getting into shipping, were you getting into the stocks of shipping companies?
Yes, generally into the ship owners, sometimes into the liners as well.
Okay, understood. Yeah, that's actually something that I didn't pay too much attention to till I spoke to one of my friends who's importing a lot of things from China, and he told me how much the rates have shifted, and I was like, oh, this is intense. And then the second one, it's interesting that you say it. So just recently, I actually went to it's a storage facility for rare earth, where they can basically hold the industrial standard. Basically, it's air conditioned and it's safe, and the facility kind of verifies that it's held in a way that the industrial standard complies and that you can sell it back to whoever the end user might be. And I found that really interesting as an investment. But as you said with the lithium example, it's incredibly hard from an outsider, which I consider myself definitely in rare earth or even rare metals, or to understand and make sense of it. So for me, it would be quite a bet to go in there and invest in any of those rare earth metals, hoping to make a profit on it. And it's also rather hard to dispose of them, depending on how you purchase them. It's a lot harder to get rid of those than selling gold or silver, because you actually need to have somebody that uses them, who wants them not just for investment purposes, but there's real use cases. And I mean, a lot of that goes into our phones, and all of those new Tesla technologies need a lot of those. And I understand that the demand is there, but it takes a lot of homework to make sense of it as a significant invest.
Absolutely. I think most of the things that I invest in would probably be a bad idea for most people. The agility that you need to invest in anything commodity-based or shipping-based, I mean, when I look at my portfolio, it's the opposite of whatever it was months ago, always, because there has to be a fair amount of churn. What's hot in shipping today is going to be cold tomorrow. And for example, the refineries, a lot of refineries are closed down, and it's just a cyclical thing. So it turns out that we need a lot of product tankers now, and I did extraordinarily well with product tankers. At some point, they're going to reopen, and those cargo miles are going to decline, and all of a sudden, we're going to have a glut, and product tankers are going to be the worst thing to invest in.
How do you sleep well at night?
How do I see what?
How do you sleep well at night, knowing how fast
sleep well at night.
All of these
diversification.
Yeah.
Diversification. So yes, I have very little in equities. A lot of my stuff is cash flowing. I mean, you need some money that's going to be liquid. So yes, I do need to have some money in equities or cash. But I would say really it's just diversification. And you also have to realize, take a Stoic approach. I understand that Marcus Aurelius, every year he'd spend 1 or 2 days sleeping on the floor just to prove that he didn't need to be the emperor of the known world to be happy. He could sleep on the floor, and if that's how life was, that he would choose to be happy no matter what. So realize that the worst case scenario is what? You have to go back and work for someone else. If that's the worst case scenario, that's far less worse than death. You can do it. So you have to focus on what really matters. So focus on the family, focus on your health, diversify, do the best you can. But again, if failure just means going and working for someone else, that's no worse than 90% of the rest of the world.
Actually, I like what you said. And for you and me, given the market we have access to, the skills we have, the worst case scenario still means that we're close to the one, if not the worst case, 2% of the world in terms of income. That's the worst case for us.
Right. I think that we have to realize that we're all very lucky in terms of historical and geographical standards, whether you're born in America or in the West in general. What we consider poverty is just relative poverty. And I don't want to make light of it, but at the same time, I'd like to help people who feel that maybe they're not in a great situation. I mean, we live in a day and age where poor people have access to mass transportation, maybe have an iPhone, etc. The people who consider themselves poor or middle class today have things that people in the 1970s, regardless of their wealth, if you're a Rothschild, you still don't have an iPhone. Your computer screen is green. There are no colors. The sort of things that we have today are just amazing wonders. And the access to healthcare that we have, again, 20, 30, 50 years ago, no matter what your economic situation is today, you have access to things that even, say, 80 years ago, antibiotics, don't exist. Going back to, say, like the 1940s, or there are very few options. Before that, the sulfa drugs, amazing. But now we don't even use them anymore because they've been displaced by antibiotics. Now today, anybody, nobody worries about dying from a cut. We don't worry about infectious diseases. So yes, we need to realize how lucky we are. And maybe if I could just be philosophical for a second, you might wonder why such a rich world is not happy, right? And it's because we're full of human jealousy, right? It doesn't matter the fact that we have things that our grandparents couldn't have even dreamed of when you look down the street and your neighbor has more than you. So it's very difficult to keep grounded. And if you can do that, then you'll be a beneficiary from this. And if not, then I'm afraid that all the wealth in the world isn't going to help.
What is your daily practice to stay grounded?
Just be with the kids, family, remind myself what truly matters. I mean, when I have a deal that's going well, or maybe, we just had something where we had an LOI, was about to be accepted, and seller pulled the financing, that was the linchpin of the deal, is just spend some time with the family and realize, look, I am wealthy just to have a good and healthy family, to have my own health, and I don't need this deal. It was a lot of excitement, it was a lot of stress, and then it was a disappointment, right? That to realize I didn't need any of that. I could survive without it. It's not what really matters. I've got to do something to fill my days. There's no point in being lazy. I think that's a horrible life. But beyond having occupation, having some work that you feel is of value to you, the number doesn't really matter.
Yeah, I love what you just said, that there is no point in being lazy. And I think this is something that people don't really connect with unless they had the opportunity or the luxury, maybe, to actually choose to do nothing for some time and see how dissatisfying that actually is. Like, like that idea of just sitting on a beach or sitting on a couch or something is so incredibly dissatisfying for the human being, like whether it's body or mind.
Yeah, I couldn't agree more. And I imagine at some point I decided I wanted to work until I get to a point that I could just travel continuously. And I'm looking forward to that because I want to get bored with it. And great story from our Cuban, he did that, right? He had a huge exit early in his life. He was able to do whatever he wanted. He traveled until he was sick and tired of it. And then he probably went back and worked, I would have to imagine, harder than he did the first time. So that's my goal.
Yeah. I mean, the thing about travel
work until I don't have to, get tired of it and come back.
Yeah. The thing is about travel is, as much as I appreciate the world, cultures, different places, different climates, different beaches, different waters, and it's all different. At some stage, it's also the same, because yes, it's new and I appreciate, but at some stage, there's also something about really dedicating yourself to something, someone, or someplace, and doing something that helps others, uplift others, that serves others, beyond just traveling on your own terms.
Yeah, absolutely. It is a fine line. The more that you realize that you are the master of your destiny and that you could go and do those things, and the more you have the means to do them, the more that work becomes a choice, it becomes more deliberate, and becomes more meaningful.
Yeah, I like that. What does Marcus Aurelius have to say about, since you brought him up? And I like it that you're philosophical, so don't shy away from it. What does he have to say about the meaning of his work? I mean, he literally was the emperor of the known world back then.
Right. My favorite quote regarding that would be about, what was I made for? Was I made here to huddle under the blankets and be warm? No. See the bees, the plants, see all of the animals ordering the world as best they can. And it's funny to think, too, because we have a choice, right? We have this natural tendency to want to be lazy, to consume pleasures. But the bees don't ask in the morning, should I get up and make honey? They just go about ordering the world, and maybe in some ways they're kind of lucky for that. They just operate out of instinct, and we, with all of our advantages, realize that maybe things could be better or they could be different. And then we start to resent the situation around us and what we have to do or feel like we're forced to do. So again, that's, I think, a very powerful quote to realize every morning when he got up. Yes, it might be easier for him to huddle under the blankets, or with his inclinations, it might have been easier to want to roam the stacks of the library and simply be a philosopher. But he had to do practically the opposite of that. He had to stand at the head of his troops, something that was very much not in his nature. But he did it. He saw the importance of duty.
It seems that we almost we suffer the freedom of choice as humans. If we were a bee or whatever, we would just go about our day and get the honey done, do what is needed. But as humans, there's so much friction around the freedom of choice we have.
Well said.
Yeah. Well, George, one of my favorite questions is, and we kind of touched up on it already, is what do you consider a life well lived?
Yes, you have to have purpose. You have to be willing to examine your life and see where you're headed. I think too many people, they just go down the channel of, well, I'm going to get my job or go to college, get my job, get married, have kids, and not really questioning, and realizing the choice that we have in our lives. It's all too easy to say, hey, my life is not my own. I have to take care of the kids, the boss, all these things, and to really to own it. So I think having a degree of ownership over your life. So whether you're an employee or whether you're an entrepreneur, realize the ownership that you have over your life. You do have choices every day. You choose to go into work, and so you might as well love it. You might as well do your very best. Those are some of the things that I think are part of a life well lived.
You think the same is true for a job or a task that we don't appreciate doing, that we should still embrace it and try to find the joy in it? I mean, obviously, a life is best lived, trying to find the joy in everything. But I find it quite hard. There's simply tasks that I don't enjoy doing.
Yes, I think seeing the value in everything is helpful, realizing that every function, whether it's in society or a particular job, we're all essential. Cleaning the house, whatever it is. I mean, it's easier, I think, in the modern era because I can put on a book on tape. I can listen to stories of history or philosophy or learn about entrepreneurship while I clean my house. That makes it a whole lot easier, but it's a choice. My greatest example in this would be Abraham Lincoln. He probably had a melancholy disposition by nature. He had a very difficult marriage. He had a lot of difficulties. He was at the helm of our nation at an extraordinarily difficult time, but he realized that we are about as happy as we choose to be. And I think that insight, which I came across young from reading his biography, was very powerful to me because particularly when you're a kid, it's easy to feel like, oh, I can't wait until I'm 18, and then I can't wait until I'm 21. And you feel like everybody has control over you and that life is hard and I just have to go to school and sit in my chair and I have to listen to the teacher. It's so boring, the teacher doesn't even know what he's talking about. And realizing, though, that it really is true. You are about as happy as you choose to be.
Yeah, that's a big one. And I think it's a great quote to end up on. George, thank you so much for your time. Where can people connect with you and where can they join the weekly Zoom meetup that you're hosting?
Great. So the best way to find me is through LinkedIn, and I have that as well as my in-person events if you happen to be in Michigan, traveling through Michigan. And you can also reach me at www.horizonmultifamily.com. And there, if you're interested in investing, you can sign up or just send me a message.
Awesome. Great. Thank you so much for your time. And we'll also add everything you just said to the show notes. So for anybody interested, please make sure to join the local or the Zoom meetup. And thanks again.
Thank you so much, Hannes.
Thank you for joining us at The Path to Wealth. We hope you enjoyed today's episode. Check out our upcoming guests and be sure to share it with all your friends and family that want to take their life to the next level of wealth.